BQ Prime. My name is Alex Matthew, and this is an earnings conversation. We're talking about JB Pharma, which has seen a sizable increase in the EBITDA in the quarter gone by, that is in the second quarter, growth of about 33%. Revenue growth, though, was just about 9%, and that's because the company is in the process of realigning its business, and its revenue mix has changed as a result of that. Let's understand how this has contributed to a significant expansion in the margins. Joining me is Nikhil Chopra, the Chief Executive Officer and the whole-time director of the company. Nikhil, thank you so much for taking the time. Now, as I understand it, it's your stated objective to have your India business plus CDMO as a part of the whole come to about 75 to 80% of the total revenue mix. And as a result of that, you've actually gone back, or you've withdrawn from your South Africa tender business. Now, that has had an impact on the revenue growth, but it's improved your margins significantly. You were above that 80% mark in the second quarter. Does that mean you've hit your target, or is there more to go?
So first of all, it's my privilege to be on the show for the first time. And thank you for inviting me. I think rightly what you are mentioning, that let me talk first about the overall business performance for the quarter and for first half of the year. We grew the revenue by 9%. We could grow the EBITDA by close to 25% and profit by around 35-36%. And rightly so, the focus is India and CDMO. India almost contribute to around 53% to our revenue, and CDMO is contributing 12%. So combination of India and CDMO is today 65%. And in a designed way, what you are mentioning, we have taken a haircut of around 120 crores for full annual basis for the current year from the South Africa business, which was a part tender business. South Africa still this year will be doing around 250 crore revenue. So 250 plus that 120 crore, which business we were doing last year, we have taken a haircut because much of that business was tender market, and there the margins were very thin. So if you combine all those things put together, we are growing as a company at mid-teens, and probably with resetting of base, I think next year you should see us probably once again coming back to growth around mid-teens. But just to also share with you, within India, what growth we have shown of around 10%, it's a market-beating growth. Last 2 years, we have been the fastest growing company in India in top 25. Our MAT September 2023 growth is around close to 18% as compared to market growth of 10%. And our focus within India is chronic part of the business, lifestyle diseases, cardiology, within cardiology, hypertension, heart failure, statin, triglyceride level, lowering pills, which helps us in terms of maintaining better gross margin and in turn EBITDA margin.
I was coming to that immediately. In fact, chronic business, I see that the growth is 18%, correct me if I'm wrong, revenue, and the industry grew at 10%, correct? So you're beating the market by a considerable amount. What is the contribution to the total revenue as it stands right now for chronic?
53%. Within India, the contribution is 55% of chronic.
Okay, and if it is your stated objective to increase chronic, and I believe you also had a significant acquisition of a brand in the chronic space also, which is contributing to an increase in revenue, what is the idea to take it to what percentage of the revenue?
So I think in next 12 months, you should see this contribution going to around 60%. But let me come here in terms of it is not only the acquisition part, but if you look at organically the brands that we have built, the biggest franchisee that we have today is Cilacar, Cilnidipine, which is a drug of choice for managing hypertension in the country. Millions of patients take that medicine, and equally we have, and by the way, the market share that we enjoy in this franchise is close to 50%. And we have Nicardia, which is a homegrown brand, Nifedipine, which again is a 200 crore franchisee, which also is there to manage hypertension. It's a calcium channel blocker. So in cardiology market, we were 13th ranked player with these two brands organically built in the company, and with two more brands that we have acquired. That is one brand for heart failure, Azmada, that we acquired from Novartis, and equally one brand 8 months ago we bought from Glenmark, that is Razor Rosuvastatin. All this put together, now from 13th rank in a 25,000 crore market, we are now 8th ranked company, and we are the fastest growing company in cardiology in the country.
Understood. I'm also looking at the margin outlook, and I believe the guidance is for 25 to 27% for the current financial year. Is this removing the impact of ESOP, sir?
Yeah. This is if you look at our operating EBITDA margin, which includes the ESOP cost, is 28.5%. Yes. If you remove the ESOP cost, it is 27.6%.
So, but then you're already at 27.6 and the guidance for the full year is at 25 to 27%. We're just at the midpoint of the financial year. Uh, would you say that it's a little bit conservative considering that the contribution from chronic is going up? The likely improvement in the revenue mix from the perspective of higher India plus CDMO, that is, both legs fire or both cylinders firing. So it would only improve from here, right?
So if you look at the journey that we have traveled as a company in 2020, when KKR took over and the new management came in, India business was contributing 45% and CDMO was contributing 5%, and our EBITDA margins were 19%.
Sure.
In 3 years, India business today is contributing 50% and CDMO is contributing 12%. And our EBITDA margins are close to now 27% plus. And this, it will take a couple of years from this 65% going to 75 to 80%. And we are fortunate enough that in first half of the year, we are almost surpassing our guidance by 100 bits point. And I think that is a range that we should be there for the full year. And then once again, by end of the year, when we put our plans for next 2 years, we will look at revising our guidance.
I'm just curious, the significant improvement that you've seen in both gross margins as well as EBITDA margins, and you've spoken about the various contributors to that. One of the main contributors, of course, is the higher share of India plus CDMO business. But I'm just wondering, what is the implication of the removal of the South Africa business to the margin? So what contribution does that have?
South Africa today is contributing hardly sub 10% to the revenue.
Sure.
So that is not a significant contribution. So it will be hardly 100 bits if ballpark figure. It's not a big
100 bips out of the 500 bips that you've seen an expansion, right?
Yeah. Yes.
Okay. Now, one strategy that you've employed very significantly, Nikhil, over the last few years in particular, and we spoke about the chronic business as well, you've been acquisitive. Does that continue? Are you scouting currently? Are you in the market? And is anything on the cards right now?
So we continue to evaluate assets in terms of, and we have also let go many of the assets. We have done 4 acquisitions in last 2 years. We have invested close to $200 million, and we continue to look at assets. The strategy that we follow is point number 1: the asset that we want to acquire should be progressive, quality, may not be growing as per market, but tomorrow at least we will put a plan in place in terms of how we can grow the asset better than where it stands today. The payback period that we commit to board is 7 to 8 years. That is where we stand, and we don't want to put any pressure on our balance sheet. That is where we stand as a company. But when you look at India because our major acquisition strategy stands in India perspective, and India to this year will be close to 2,000 crore revenue for us, and we are 22nd ranked company in the country with 1% market share. Out of that 2,000 crore, 400 crore revenue is coming. We bought around 275 crore revenue, and today it is close to 400 crore. But organically, 1,500-1,600 crore revenue is what we have built and what new launches we have done. So acquisition is one of the strategy. It is not the strategy that tomorrow we are following as a company. The strategy is making big brands bigger, looking at how do you reduce the burden of the disease, how do you make new launches success, and acquire brands. And equally, the work that we are trying to do in the world of CDMO that we do outside the country. This is how our entire strategy folds out.
Nikhil, completely understood. We're running out of time, so yes or no answers for 2 questions. One, yes. Have you reached the peak of your EBITDA margins this financial year, or is there more to come?
We are almost there in terms of what you see as margins. I think we'll be following the same trajectory for next 2 quarters.
Okay, and teen double-digit growth for revenue is expected in the current financial year?
Yeah, we are almost there. We are going at double-digit. So we will end the year by double-digit.
Fantastic. Nikhil, look forward to speaking to you the next time as well. Pleasure speaking to you. Thank you so much for taking the time.
Thank you, and wishing you all happy Diwali and prosperous New Year in advance to all you and your country.
Mr. Chopra, I wish you and the team as well a very, very happy Diwali and a happy New Year.
Thank you. Thank you.
All right. Viewers, there you have it. The management of JB Pharma, and that's a stock that is buzzing in trade today. Do stay tuned. Lots more coming up on BQ Prime.
Wishing all the viewers of BQ Prime a very, very happy Diwali. We wish you that this season you get the most happiness and joy in terms of everything which you do.